What is going on YouTube? Welcome back to the channel. My name is Dominic, most people call me Dom, and as you guys saw from the title and the thumbnail, in today's video we're going to be talking about RTP, which is a SPAC, merging with a company called Joby. And Joby Aviation is a company that is competing in the same field as Archer, and Archer is one of my most popular videos on this channel, so you guys should be familiar with what I'm going to be talking about. Anyways, if you're not, before I get into it, I do want to let you guys know that I'm not a financial advisor, and also the footage you're watching right now, right in this all the Google Docs that you're seeing with all the information about Joby, this is access that all of my channel members get. They subscribe. It's $2 a month. The link will be down in the description below, and you get access to all of my spreadsheets, right? All of my documents that talk about all of these stocks. They're one-page theses on why I like a company or why I dislike a company as an investment. And it's very simple, and it's only for $2 a month you get access to this. And I also do live streams once every 2 weeks as well for only my channel members, where we could just answer any of your questions about stocks or SPACs, and we just vibe and have a good time together. So if that does interest you, please go down in the description below. It's $2 a month. I greatly appreciate all of the supports, and I will also be raising the price to $5 a month after this week. So as long as you get in this week before Sunday, you'll be locked in at $2 a month for as long as you decide to stay as a channel member. It's a great deal. After that, you're basically paying 2.5 times what you would be paying already. So it's a great deal, and I already held you guys for long enough, so let's just get right into the main aspect of this video, which is talking about Joby. So to begin with, let's look at their market cap and their enterprise value. So at $11.80 a share, their market cap is currently about $7.8 billion, and their enterprise value is $5.8 billion. And if you're wondering how I got this market cap, all you do is take the number of outstanding shares from their investor presentation, and you multiply the number of outstanding shares by the share price, which is $11.80, and you get a market cap of $7.8 billion. And then you subtract the amount of debt they have and add in the cash that they have, and this is their actual valuation, which is $5.8 billion. So whenever I refer to their valuation in this video, I am referring to their enterprise value. Okay, so let's begin by talking about what Joby Aviation is. So if you are unsure about what Joby Aviation does, what they are, as you guys see from the video right here, this is their plane, their little vehicle. It's called an eVTOL, and it's basically a version of an electric helicopter. And I already talked about what these vehicles are in my past videos talking about Archer. But again, I will link this little video that they have of them actually testing it out in person. You guys can see what it's like to see it, flying around in the air and things like that. It's very interesting, and it's just a very innovative product. So Joby Aviation, similar to Archer, is building an all-electric helicopter-like vehicle called an eVTOL. They have shown footage of their first test flight, which was on February 24th of this year. I will also link that down in the description below, as I mentioned earlier. Joby has the same business model as Archer, which is OEM and ride sharing. However, Joby stands out from competitors because they are partnered with Toyota, right? They have acquired Uber Elevates, and they already have a product made, unlike Archer. So that's sort of my executive summary on Joby Aviation and why I like them just a little bit more than Archer, as you guys can see from what I said there. And let's look more to the risk factors. What's risky about this company, and what is the benefits of investing to this company? What are the upside potential for this company? So to begin with the risk factors, they are operating in an unproven market. Similar to Archer, how I mentioned earlier, the market for these vehicles is unknown, right? Especially in the UAM space, where they're trying to create this ride-sharing business where people can just call up one of these eVTOLs and they'll take them from one place to another, similar to Uber. That actual market itself is unproven, right? There could be a little bit here and there of Uber helicopters and things like that, but the actual market itself is only operating in a couple cities here or there, and it's really not even proven because there hasn't been enough time to know how consumers are going to react to the market. So this company is pretty much trying to enter a market that is uncertain, right? We don't know what the future of this market is going to be. Now they're predicting a $1.5 trillion market by 2040. You're asking a lot from that. That's 20 years from now. You don't know what's going to happen, a year from now, let alone 20. So it is risky. I want to give that quick disclaimer right now when talking about their markets. Also, they're having negative EBITDA until 2025. If you look at their financial guidance or their financial forecast in their investor presentation, they're not generating any substantial EBITDA until 2026 or 2027, but they're going to have a negative EBITDA until at least 2025, which means that this current valuation of $5.8 billion is a lot for a company that's not going to make any real money until at least 2025. So keep that in mind. They're also not going to generate any revenue until 2024, but even in 2024, they're only going to generate about $100 million in revenue. So 2025 is when you start seeing, the investment pay off if they fulfill on their projections and these future projections, right, for their future financial guidance. So we're basically looking at 2025 numbers to see if it's a viable investment, which is about 4 or 5 years out. And a lot can happen in 4 or 5 years. We don't know what can happen to the markets, let alone a company like Joby or Archer that's in the startup phase like this. So it is risky. They're valued at $5.8 billion right now. They're not going to generate any revenue until at least 2024. So you're paying a lot, right? You're paying a hefty valuation for a company that might not even be worth it in the long run. So you got to see how that plays out, right? That's the main risk as well. You're paying a lot. It's an expensive buy-in for a company that's not generating any revenue just yet. The last thing I want to talk about is that as a risk factor is that they have a slow scaling phase. In their investor presentation, they talk about scaling into a new city or breaching a new market once a year. So in 2024, they're going to operate in 1 market. In 2025, they're going to operate in 2 markets. And in 2026, they'll operate in 3 markets. So they're adding 1 new city or market each year, which can be a good or bad thing depending on how you look at it. Basically, breaching into these markets slowly, and they want to be able to penetrate them effectively, right? So if you try to breach into all these different markets at once, it's going to be harder to be effective with it, and it's going to be harder to make these markets sustainable. So they're doing 1 at a time, which could be a good thing, like I just said there, but it's also a bad thing because it's very, very slow. And a lot of other companies in the tech space and things like that, when they scale really quickly. Joby is scaling very slowly, which, again, like I said, it's a good and bad thing. It depends on how you look at it. It's a double-edged sword. And I just want to put that on the risk factors as well for you guys to acknowledge. They're not scaling quickly at all. It's going to be 1 city here, 1 city the year after, another city the year after that, at least until 2026. So it's going to be slow scaling at first, along with the fact that they have a hefty valuation that's going to generate very little revenue until at least 2025. So those are the risk factors so far. But they also have some upsides. So let's look at the upside, right? First off, they're going to be vertically integrated. Everything's going to be made in-house, which makes things very, very easy for a company like Joby. They also acquired a company called Uber Elevate, right? And Uber Elevate was an Uber platform, and essentially they're going to partner with Uber for that to launch into these U.S. markets for their UAM, their ride-sharing business with their EV tolls. So that is a cool acquisition, right? For them to acquire Uber Elevate, but it's also a good partnership for them to launch and to breach into new markets as well. So it's a win-win in that aspect. Another thing that I really, really like, and I'm going to highlight for this as well, actually. Let's highlight it right here. Okay. So as you guys see, they have a 1.3-year payback period per vehicle. If you're not sure what this means, that means that essentially over the span of a year and a half, they're going to make all of their initial investment on the vehicle back. So they're basically going to be net zero after 1.3 years with their vehicle. And after that 1.3 years, everything else they generate is going to be profit or revenue that could generate into a profit. So that's very, very good. They're basically returning their investment in 1.3 years per vehicle, which is very, very efficient and it's effective. You notice when I scroll up to Archer that they have projected to make $1.1 million in operating income per vehicle. They don't really give any information for Joby in terms of how much they plan to generate in profit per vehicle, but they do plan to have a 1.3-year ROI back on their vehicles. So that's very, very good. And that's a really short payback period, which means that after that 1.3 years when they make the vehicle, the rest is going to be a lot of revenue and profit, which will benefit us as investors, 5, 6, 7 years from now. Also, they have a long-term EBITDA margin targets of about 40%. And that's very, very, it's decent. It's very, very solid. It's a solid EBITDA margin for them to have. Again, they're projecting this by 2026 and 2027. So that's far, far out. And, 5, 6 years from now, it's going to be impossible to know what the actual EBITDA margins are going to be right now. But they are projecting or trying to strive for a 40% EBITDA margin long term. So my overall thesis on Joby Aviation, right? You may be wondering this. And this is right here. I'm going to highlight it for you guys so you can see. So my thesis, personally, I think that Joby Aviation, although better positioned than Archer, is still a risky or a speculative investment in my personal opinion. They are competing in an untested market that won't see a big TAM till at least 2040. They'll have a negative EBITDA until 2025, and their slow scaling phase only allows them to enter one new market or city each year. Unlike Archer, however, they have acquired Uber Elevate, which will better equip them to breach new markets, and their 1.3-year payback period does allow them to generate profit fairly quickly. They are also vertically integrated and will have a 40% EBITDA margin long term. So guys, this is a speculative investment. I like this better than Archer because they're further ahead, right? They have the first mover's advantage compared to Archer. They have some different acquisitions in place, like Uber Elevates. They have that 1.3-year payback period, and they're also vertically integrated. So guys, for me personally, I have entered Joby Aviation. Now my channel members know the exact amount I entered with and my exact position and my exact average, but I have entered Joby Aviation as a small speculative investment, right? This is not something that I expect to be a main highlight of my portfolio. In fact, it actually takes up like 0.5%, right? So 0.5% of my portfolio is in Joby. It's just a quick speculative play, a nice lotto ticket for me personally. If Joby does fulfill on their promises, then this is going to be a great investment for me. If they don't, oh well, it was only 0.5% of my portfolio. It was nothing crazy. I can move on with my life and take that loss. So that's how I'm treating this as an investment, right? This is a speculative play. It's like a lotto ticket for me. If you are deciding to invest into Joby, again, I want to state that I'm not a financial advisor, but if you do decide to invest into Joby, please keep in mind that this should be treated as a speculative investment, as a lotto ticket, like I keep saying. Do not treat this as a sure investment. Like, it's not a for sure investment by any means. No investment really is. But unlike companies like Apple and Amazon and Microsoft and Home Depot that are selling a proven product in a proven market, there is no proven market for Joby Aviation. And the product itself also, although they have a product physically made, it's still not as proven as I would like it to be. There's a lot of risks involved, and there's a lot of what if questions that need to be answered before I'm confident in going all in on Joby. So until that happens, I am treating this as a speculative investment, and I hope that if you decide to invest, you do treat it as a speculative play as well. There's nothing wrong with investing into Joby Aviation, just like there's nothing wrong with investing into Archer. As long as you know the risks and the upside and you know what to look for, there's nothing wrong with it. And I just want to state this video as my little analysis on why I like or dislike Joby. So I hope you guys did enjoy. If you did, please subscribe down below. Like the video, comment your thoughts on RTP stock. Did you buy into it? Do you agree with me? Do you disagree with me? Let me know down in the comment section below. I'm genuinely interested. Also, if you're new, guys, and you want to become a channel member, it's $2 a month. After this week, I'll be raising the price to $5 a month. So if you get in now, you get access to all these Google Sheets right here. You get access to all of my Google Sheets, all of my Google, my docs, everything you guys want to know about any stock, right? I answer it for my channel members. It's $2 a month. Currently, the price will be raised to $5 a month this Sunday. So get in now, lock in the $2 a month share price, and I'll talk to you guys in the next video. Take care, enjoy, and I'll see you guys later. Peace.